Hi everyone, I'm Ken from CryptoTradingKS and the inventor of the CTKS method and BORSOG trading. If you're new, a very warm welcome. And welcome back, KS family. Let's run the numbers. Bitcoin is currently down 0.03% to 21,532. Ethereum is up 0.25% to 1661. From my 30 plus years in financial markets, I explain the smart money mindset to assist you to be more of a financial blessing to yourself and those you love, gaining positive excellence and real wealth in the process. As a community dedicated to active learning, we look at all these different sectors, trying to see how they interrelate to Bitcoin's momentum and movement. For example, what particular things shine when Bitcoin is coming down? What particular things go down when Bitcoin is going down? Some go down and up more than others. In BORSOG trading, we're always seeking to synchronize in with the market. That's actually why we look at all this information. Each and every introduction of the video has this in it, and it's there for your benefit. It's all about synchronizing you in with the market. Please let me know in the comments, as part of your active learning, have you seen any synchronization or desynchronization with Bitcoin? And what that basically means, what sectors move with Bitcoin and what sectors move independently or actually opposite to Bitcoin? And that's a very, very valuable question to answer. Bitcoin is currently trading at 21,500. I want to point out two very important things on this particular chart. One is this lower support line, and it comes into play at around 20,000 for Bitcoin. And another one is this support line that was breached. Basically, when you have support lines and price goes under the support line turns to a resistance line. It can turn mildly or strongly depending on price action. And what we can do, just zoom in here to give you a better indication. What we saw, there were two support lines here back on the 15th of August, and price actually traded below. And then the next day, price traded below and we lost these supports. We tried to retest the support, and you often get this retesting before a resumption down. So this is something that you want to look at. This is kind of like a false rally that occurs. You can see these all the time in crypto. Crypto is incredibly volatile. And when you lose a support level, you can get big sell-offs. So you must be aware of that. Pay a lot of attention to your lines. It's really, really vital. I can't tell you how vital it actually is. So if we have a look at recent price action, what is this telling us? It tells me one thing when I look at this. The 21,529 or 21,530 level is quite a strong level. The buyers and the sellers are actually attacking this particular line. The buyers have been trying to defend it and get over it, but the sellers have been pushing price down at that particular price. So what is actually occurring here? What we can do when we actually look at the technicals, we can say we're under resistance. Price is seeking to get above this very initial resistance line and not having a lot of success doing it. Unfortunately, it gets a little bit worse because we have a lower resistance line coming out here on a different time frame, which actually is consistently being rejected. So we're under multiple levels of resistance, and then we're under one here as well. So you can see we're still under resistance. The sell-off is actually not over. It's still going, but we could get one of these kind of wicks up to retest these levels. So we could expect a wick up to test the around 22,500 or even up to the near 23,000. That is on the cards, but there's still, if that happened, we're still under resistance. We haven't broken the downtrend. Please let me know in the comments, what do you think Bitcoin will actually do? Do you think it will go up to retest these resistance levels, either this one, say for example, the one at around 22,000, the one around say 22,400, or the one around say 23,000? which of these resistance levels do you think Bitcoin could actually attack? And will it be successful and get over them? This is really important. We have no story as traders. We just look at the charts and say we're under very strong resistance levels at the moment. It's not that positive. Basically, we've had a huge sell-off and the shorts have been making a mint, but we're back to a resistance line. In fact, the real first resistance line. And this particular resistance around that 21,530 mark has been absolutely defended by the sellers. They're pushing it down. They don't want it to gather momentum to get through these resistance lines. The other thing I want you to pay attention to is the $20,000 level. If we get price whipping under the $20,000 level, especially on strong volume, you must really be careful. Now, why do I say that? And this is why I draw you to this particular line here. There's not a lot of support underneath this $20,000 level, as there was not a lot of support underneath the basically $28,000 level. When you don't have a lot of support, you can get cascading sell-offs because there's nothing to catch it. If we get a sell-off underneath the 20,000, please be very wary of that. So what do we do as professional smart money traders and investors? As crypto technical analysts, we first mark up our charts, and I'm going to show you a chart on Solana, which is going to be really interesting. It has specific levels derived from the CTKS method, and that will give you buy and sell levels that are very significant in the market. Then as step number 2, we need to look outside the charts. We need to look outside crypto, because crypto is just one market in a global series of markets, and they're all interdependent on each other. Then we come back into the crypto market, knowing opportunities reset daily, and we want to find the market's focus. This is where synchronization becomes really important, and enhancing your pattern recognition too. Before we actually pull the trigger, we must have the aim of positive excellence. Why is this? Because many people just focus on money. They have dreams of becoming rich, retiring, doing nothing. Their dream of doing nothing, just making a mint. But life doesn't work that way. You always get success based on your good foundations, your good fundamentals. Positive excellence is the fastest way to become wealthy that exists on the planet. And then, of course, we do our buying and selling. But what typically happens, retail investors and traders just want to buy and sell first. They don't want to do any of this hard work. And who can blame them? Who wants to do hard work anyway? But the concept is, if you don't do the hard work, the market will take your money. I've been in financial markets for more than 30 years, and I've seen my fair share of losses and fair share of gains. It all comes down to synchronization. When we look at anything, and we need to look at Bitcoin first, we think always about the fact that price can go for us because we're going long. It can go against us because we're not going short, and it goes neutral sometimes, just like what we've seen over the past sort of 5 days. And this is all part and parcel of what markets do. But we're aware of our downside. We're aware of our upside. Active learning is all about making ideas real. How do we make an idea real? We actually participate. And one fantastic thing is to do your BORSOG synchronization code. What this does is it actively focuses your mind on what the market could do. And when you actually understand what the market could do, it could go up and down, and there are percentages associated with that. And understanding those percentages is so incredibly important. And get well soon, Beardy. The more active learning you do, the better you will be, the more profitable and the less stressed as well. And I'd like to thank everybody for sharing their synchronization codes. It's very personal. What that actually means is your synchronization is only up to you, and it really depends where you bought. If you bought very well and you think it's going up, it could be going down for somebody else. That's why these codes are just for you, but they get you to do active learning, and active learning is always the key to success. And what exactly does that code mean? The first letter is down, flat, or up, that one. And this is against, nowhere, or for. And we always think about the probability of a trade going against us, going nowhere, or going for us. But we think about those trades, the for us is last, not first. So we don't have rose-colored glasses. We don't just say, the market's going to give me early retirement. The market will give you back what you put into it. The more active learning you do, the more that you will make. And the synchronization factor is just how percent-wise you feel synchronized in with the market. High or low, it's all about how you feel. And your synchronization factor can never be compared to another person's because it's your personal feeling. We've seen for the past 4 days, we've been basically stuck in a range. And we can see 4 days ago, we were down here at around 21,000. And then 3 days ago, we were up here at about 21,600. And then 2 days ago, we were down at 21,200 roughly. And then yesterday, we were there at 21,540. Now today, we're at 21,485. What is this actually telling us? It means price is being caught in a massive amount of indecision. We can see the price is getting rejected around that 21,633 mark. We're just trying to get through it, but not having too much success. What do we also notice here? There's an upward support angle just coming in through this area, and price has actually retested that support. If it can maintain this support, we may actually break over this 21,530 level, which would signify really good and positive impact on price. But you remember that we're under multiple levels of resistance. This could simply just be a retest of resistance levels, these particular ones here. So just pay a lot of attention. We're still under resistance. Things have not turned around just yet. One thing that we always need to keep in mind is Rule 225. Bitcoin cannot escape the stock market's gravity. We've seen a dramatic increase in the probability or the potential of a 75 basis point increase in the federal funds rate from 53% to 60.5%. This doesn't go well for the stock market. It actually throws negative cost pressures into the economy, and it increases bond yields and decreases bond prices. For many reasons, I think we're actually going to see the potential of a 100 basis point increase on the cards. And I'll come to that in a little bit of time. But you need to be aware when this particular larger basis point increases, that's the Fed going more aggressive on inflation. And that's not good for the stock market. And it's not good for risk on assets such as crypto. The Jackson Hole Symposium has started, and it's expected that Federal Reserve Chairman Jerome Powell will be giving his guidance on the aggressiveness or non-aggressiveness of Fed policy when it comes to increasing rates. What we do as crypto technical analysts, we're independent of the news. We just look at the charts. When you look at the 10-year and the 5-year break-even inflation rate, they're actually increasing. And this is telling policymakers that they're not doing enough to actually lower interest rates. That's why I expect at least 100 basis point rises to be on the cards. And that's going to catch the markets completely off guard. And markets don't like to be caught off guard. If they're caught off guard, they get a negative surprise. They react very badly, like a very spoiled 2-year-old. They sell down. I think it's particularly problematic because as the NASDAQ has come down, these 5 and 10-year break-even inflation rates should have been coming down because that's generally the way it goes, but it hasn't occurred that way. And Masterclass students, I do a deep dive and you get my live chart in TM4. It's good to know that the next FOMC meeting is in 27 days. And what about when we look at the market? We've seen a big jump in the VIX. This is the fear gauge. And you'll get my live charts, Masterclass students, in TM6. And what have we seen? A huge jump and a little bit of a pullback. This is not even significant in any way, shape or form when it comes to a pullback. The VIX is a very, very spiky animal. It likes to explode and implode all over the place. Now, what we've actually noticed, for example, when we look at the NASDAQ 100, that key structural level of 12,847.50 has held so far, and I mean so far. If the Fed pushes for 75 basis point increases or even 100, which is not even on the table at the moment, I would expect the NASDAQ to at least come down to 12,086. Of course, we always have to have the concept of no story, even though that's really quite difficult at times. The concept being, we're at a support level. What if we get a technical bounce up to resistance, which will lower the VIX and increase prices, and then it retests and resumes down en masse through those levels? That is absolutely possible as well. Please always remember that the shorts and the longs are doing an epic battle with each other. Well, they're kind of like yin and yang. And what do we see with bond prices? We can see bond prices coming down to its own structural level at 136.06. What about bond yields? They're going the other way in anticipation of a Fed rate increase. And they're getting up to a structural level at 3,143. What about gold? Gold did as we expected it to do. It did that bit of a structural bounce, but it's still under a lot of negative pressure. That is quite substantial resistance. It may waver around to get the strength to overcome it. And what do we see with the dollar? The dollar has a very key structural level at 108.448, and it's just actually consolidating around this level at the moment. Why is it consolidating? Why didn't it just push up to 110.689? Because 110.689 will be a very, very heavily defended sell level. And what do we see with oil? Oil has broken through its resistance level, but it's come up to another structural resistance level at 185. It's currently 101.77. It's trying to get above there. And you might say, Ken, why are we looking at this stuff? We're just all about crypto. Well, if you read anything about crypto in the headlines, they always talk about bond yields, gold, the DXY, oil, inflation, and energy is a big, big driver of inflation globally. And you'll also get into junk bonds, which are high risk bonds. And what do we see? They're started to find a little bit of support at the moment. The junk bonds can be a very, very good, this is just high risk bonds. They can be a very good indicator of risk on in the economic system. Keep your eyes on that. And you'll get all my live charts here in TM6. We also need to keep our eyes on the metals, and we look at the inverted VIX. What we see is the VIX is starting to spike up. It's just done a little bit of a retrace, but it's not much of a retrace in overall percentage terms. And when we invert the DXY, it can give us a fairly good signal on where the precious metals, such as gold, platinum, palladium, copper, silver, are going. And I've also, of course, put Bitcoin in there, Bitcoin, because Bitcoin is what we look at. So we're looking at multi-dimensional analysis. And after 30 years in the markets, if you don't look at the markets like this, you're going to miss signals. We know Rule 45, no alt can escape Bitcoin's gravity, just as Bitcoin cannot escape the stock market's gravity. The alts, your beloved alts, cannot escape Bitcoin's gravity either. At the moment, there's extreme fear inside the crypto market, and when we look over time, that extreme fear is actually increasing, and the higher this number is, that's towards greed, and the lower this number is, that's towards absolute extreme fear. And what we can see, for example, over the past 3 months, is that the fact there's so much fear inside the crypto market. Many people are leaving crypto, and this is exactly the time that you want to be in crypto. It's a really interesting psychology with retail psychology. What actually happens? People want to buy at the absolute highest price, and they want to sell at the lowest price. This is not the way to go. If you went shopping, you wouldn't say, hey, I want a TV. That one costs $100. I'll give you $1,000 for it. You wouldn't do that, but people do that with their investments all the time. And if you could sell the TV for $100 and someone was offering it to you for purchase at $10, you'd say, yes, please, I'll have that TV because I can sell it for $100. Yesterday, we talked about the retail mindset, and the retail mindset is the thinking that inhabits Zone 1 and Zone 2. Smart money is Zone 3 and Zone 4. But the question was, what do you think about this retail mindset, all of these emotional roller coasters that people go through, and they're promoted to go through it? There's even Wall Street cheat sheets out about, oh, it's at you hope, euphoria, thrill, anxiety, denial, panic. Like somehow that explains the market. It doesn't explain the market at all. It's misinformation. There were so many fantastic responses. Tales from the Man Cave said, the emotional roller coaster of retail trading and investing is problematic because you're not in control of anything. It's like being on a roller coaster for real. You get strapped in and the market just does what it does and you're surprised by any turn it takes. You start to blame yourself. Why the hell did it get on this thing? Or you blame others. Why didn't they tell me it would be this bad? But even worse, when things go well, you don't know why and for how long. You operate on hope and wishing. Transitioning to a smart money mindset is like building additional stops along the roller coaster tracks so you can hop on and hop off and only ride the parts that you want to. Well done, Tails. Getting strapped into the roller coaster and just going through the terror and elation is what happens in Zone 1 and Zone 2. These are the lose money rule zones. Building stops into the roller coaster could be looked at as Zone 3, and having no roller coaster at all would be Zone 4. And Shane said, the retail mindset gets caught up in all the negative aspects we try to avoid. FUD headlines, emotional hearsay. Oh, Your Honor. We need to do the work and see the charts for what they're telling us each and every day to stay in sync with the market. It's easy to fall back into the retail mindset. That's Zone 1 and Zone 2. So we have to constantly work at positive excellence and reinforce the creed and do our daily BORSOG code to stay aware of where we are at any given time. Just excellent, Shane. And there's so many fantastic comments. I really urge you to read the comments. They're just what you will find the longer that you are in financial markets. The markets only reward knowledge and the application of emotional control. And also, they don't reward greed. They penalize it. People want money, of course. That's why you're in the market. But if you don't have the foundations of kindness, integrity, decency, inner and outer peace, gratitude and happiness to support that success, money is just a flag of success. It's not success in itself. It's just a byproduct of success. What's more important is the person that you become. It's more important to have meaning and happiness and fulfillment in life. And when you do things really, really well, when you are persistent and committed to what you do, you're kind. And kindness is a very misunderstood concept as well. Kindness starts with friendliness. I can't believe how many unfriendly people there are in the world. Just saying hello is a friendly act. It's a kind act. Calling people by their names is a kind act. There's so many kind acts that we can do that bring meaning and fulfillment into the world each and every day. And you build your meaning each and every day as well as your happiness. And happiness is also an output, just like success is. So how do you become happy? You become a person that has inner and outer peace. Please let me know, is inner and outer peace possible if you have an emotionally driven mindset, if your emotions are controlling the buy and the sell button? Another thing that happens with retail, investing and trading, people want to be 100% in the market 100% of the time. Smart money knows when it's time to step away from the market, and there are times, absolutely, that it's just best to step away. That doesn't mean that you go on holiday or anything. Stepping away is just locking in and protecting your capital or profits. There's a lot of uncertainty. The market is under resistance. Things are unclear. But for retail, they're chasing every last cent they can extract out of the market. And the market knows it, and it's trapping them in as well. We have to be really, really careful with the market. Many mantras fly around. Buy the dip, and it keeps on dipping. This is what we try to do. When you have a negatively biased market, we actually pay a lot of attention to support and resistance lines. Of course, I don't know your finances and I don't know what you're doing with your money. You may be just dollar cost averaging on the way down and holding a long-term investment. If that's the case, that's perfectly fine. And if you've got a small percentage, if you're a major investor, just take a small percentage to trade with. This will actually help you to synchronize in with the market and do your dollar cost averaging much, much more effectively. When we look at the shorts and the longs in Bitcoin, we can see the shorts coming up, but they've also lost a bit of confidence recently. We saw the longs spike up, which slowed the downtrend, but they're actually losing confidence as well. I believe what's actually happening, there's a lot of uncertainty in the market, and the markets will become clear, but just not on our timelines. The market becomes clear when it wants to. Let's have a look at if these liquidations are significant. We can see that over the past 24 hours, there's been 92.74 million in liquidations across 37,167 positions. And when we look across the past 24 hours, about 57% of total liquidations have been short liquidations. What about the past 12 hours? 68%. Past 4 hours, 68% short. What about the past 4 hours? It's gone the other way, 73% long. And what about the past hour? 80% long. It's always changing. It's always dynamic. But one thing that we do notice, the volumes are very, very small. This is almost like weekend trading. What is this telling us? It's basically saying people are not committed either side to the market. Things are very, very unclear. And that's probably why we've seen such a spike in the DXY. People are literally sitting it out and seeing what happens next. On that basis, what could happen next? What are the probabilities that we're looking at? For example, we can see that very heavily defended 21,530 grade around here in Bitcoin. That's been defended time and time and time again. Even though price sought to push up, it's been squashed by the sellers. We're still under this tight resistance, which will play into effect at around the 21,672 mark. So if you get price going above 21,700, you can say we've crossed the first line of resistance. And then what is the next major one? Let's look for confluence. It's around 22,000. Let's just make it easy. Just all twos. 22,222. There you go. Nice and easy. So if we get up to that 22,222 level, we're actually seeing a moderate repair in price, but we're still under resistance. What do we need to get over resistance? We need to trade at least, well, just to make it good, about 23,000. And then we could come back and retest this upward support line at 22,500 and resume off. That's the force scenario. The nowhere scenario is that it just bumps around here, not too much in terms of breadth, but just bumps around like what we've been seeing. What is the negative scenario? The negative scenario might actually catch a lot of people off guard. The negative scenario could be that we actually come up and test the 22,000 level and then sell through this previous area of support and sell through the 20,000 as well. It's not necessarily that it will just decay. The markets are not like that. I believe that's all that is actually happening right now is the shorts are covering their positions, getting ready for the next hit. If you look at the market dynamics on the 5-year and 10-year forward break-even inflation rates and the basis point increase in the probability of a 75 basis point increase and potentially 100 is going to be on the table. and we've got, say, 27 days for it to play out. When you look at that, the chance of violating this $20,000 level becomes exponentially higher as we go on. If we break these downward resistance levels, that becomes a good probability that we maintain the 20,000 level. You have to be really, really careful in the markets at this particular point of time. So why aren't we just going and saying, oh, it's BORSOG, just buy the dip, buying on red? Say, for example, that you were buying on red here. Well, that can be a profitable thing to do depending on how you're doing it. Even when price comes down, it goes up in certain alts. But always the market will get dragged down eventually. So what we actually see, there's not too much support below the 20,000 level. We want to be careful. We want to think what can go for us, what can go neutral, and what can go against us. But we want to put the what can go against us first. Because of the roller coaster of human emotions, we must constantly work at positive excellence, reinforce the creed, and do our daily BORSOG to keep in synchronization with the market. Just brilliant, Shane. And there's been so many fantastic comments. Please have a look through them. They're just brilliant. The CTKS Creed is a series of positive affirmation statements that you say to yourself to prime yourself for profitability in the crypto market. I know the universe wants me to succeed. Every day I show kindness, friendliness, integrity, and gratitude. I know opportunities and life reset daily. I am worthy. I go slow to go fast. I start small and scale with BORSOG. Life pullbacks give me the strength for the next life rally. I am dedicated and committed. I win or learn and never blame. This creed is to keep people out of Zone 1 and Zone 2 and help people to get into Zone 3 and Zone 4 as quickly as possible. That's where all the good things in life are. When I say caution should be exercised, it's really that we're just getting ready to deploy our funds again in a concentrated manner, but we must make sure that we're synchronized first and foremost. So that's why BORSOG trading is so very, very valuable. We can see that over the past 24 hours, global crypto market cap decreased by 0.38% to $1.03 trillion. There's always a bull market somewhere, to quote Jim Cramer. The concept is that cryptos are always doing well somewhere. Even when price is just tanking, there are some cryptos that go absolutely parabolic. So just because main prices go down doesn't scare us out of the market. We just take caution because we're getting ready to deploy our funds in a concentrated manner when the time is right and when we've scaled up sufficiently. And looking at the greatest gainers in the past 24 hours, Decred is up nearly 12%, Anchor 8.7% up, Atom a little over 7%, Helium 4.72% up, and Ethereum Classic around 3% up. The greatest losers over the past 24 hours in the top 100, XDC down 6.2%, Chili's down about 3%, XMR 2.5% down, Matic down 2.4%, Sandbox down 2.2%, and Tron down around the same, 2.2%. Traders are always in the market, but that doesn't mean they're fully deployed in the market at all times. Investors and traders, what's the relationship between them? All investors become traders anytime they buy or sell. If you sell, you're a trader. If you buy, you're a trader. And if you hodl, you're an investor. But the concept is buying and selling are all part and parcel of what everybody does. It's just the hodling period that defines you in tax law as an investor. But think about it this way. Just from a small percentage accumulated, you can do really, really well, often better than you can do as an investor. And many pundits are basically saying that the economy is going into recession. In recessionary times, you want to be a trader, not an investor. And why is that? Because of Rule 4, price moves in waves. Price is always going up and down and up and down. In any market, upwards, bull market, bear market, doesn't matter. Price is always moving in a wave. Let's have a look at the top cryptos, and I'll get into Solana as well. Looking at Ethereum, you can see ETH is following Bitcoin's gravitational pull. Also, Binance Coin is following it, but it's much, much stronger. Notice how Bitcoin's gravity is playing out, especially when an alt undergoes correction. For example, when Bitcoin came down, Binance Coin came down. When Bitcoin came down, ETH came down. When Bitcoin came down, ADA came down, and XRP, and Solana, and Doge, and DOT, and SHIB. This is just what happens in the crypto market. Keep your eye on Bitcoin. It's so important. And what are we actually seeing here? XRP is starting to show a little bit of strength. So this one may be something to keep your eye on. What about Solana? It's following Bitcoin's gravitational pull, but it's starting to look a little bit weaker there. Doge has realigned with Bitcoin's gravity. Before, Doge was having a bit of a party. It was spiking above Bitcoin's gravity. And we saw a very, very similar thing too with SHIB. Just keep your eyes on the meme coins. They can tell you so much about the market. Okay, let's have a look at DOT. DOT is following Bitcoin's gravity, but is currently stronger. So it looks like DOT and XRP are leading the secondary pack because Binance Coin is way out there in front. And when we look at SHIB, what's happening with SHIB? It's realigning. It's synchronizing back with Bitcoin. You'll find this synchronization, desynchronization factor is occurring within particular cryptos as well. As promised, let's have a look at Solana. Now, a lot of people draw on recent price action. This is definitely not the way to go. You want to look at market structure. So looking at market structure always involves doing the confluence of the CTKS method. And what we see through these Stanfield levels, that's just the confluence of CTKS levels. We can see there's resistance for Solana at 37.60, light resistance, heavier resistance at 42.76. These are the ultimate buy and sell levels. And when you look at support, we've got relatively heavy support at 33.40 and 32.03. But if we look a little bit more, where are the next support and resistance levels? The next support level is way down at 24.37. And what about the next resistance levels when we get above 42.76? One is at 55.26 and another one at 60.87. What we actually think, if we look at Solana's technical pattern, if we manage to break above this resistance, and this is going to require the stock market to do so as well, which means the VIX may spike up and drive Solana down to these 32 levels, $32.03 levels, and we might be able to buy there. And so long as the VIX doesn't keep spiking and things normalize inside financial markets, we'll get an uptrend after that. But if the VIX continues to spike, we may come down to that 24.37 level. We always have to have no story. We need to be aware of what is happening inside the market. And we know the VIX is starting to go. And we know also the yields are starting to move up. And also the probability of a 75 basis point increase in the federal funds rate is increasing. And when the 100 points comes onto the board, it's going to capture the financial markets in terror. The key is we're at a pivotal time. It could go either way. You must have your scenarios at all times so that it could go up, go for you, go against you, or go nowhere. This is what's called three-dimensional decision making. Every professional does this. When you get into zone 1 and zone 2, retail, they only have this going for me prospect, and they discount all the going against you that can happen. And it can really happen in crypto because crypto is so volatile. Remember, you control the trade, but the market controls the return. We can't force the market to give us what we want. It will never know us personally, and it will never know us full stop. This is also important because if the market goes against you, it's not personal because the market didn't know you in the first place. In life, everything is rewarded by the effort that you put in. What you reap, you sow. If you do the hard work, you'll get the rewards. It can take time, but that's why we go slow to go fast. And if you want to learn how to BORSOG effectively, you'll need to go through the CryptoTradingKS Masterclass and walk up all these steps from foundation, trend, positive excellence and real wealth into trigger. And that does take some time. But hey, this is a lifelong profession. You can be in crypto for the rest of your life. It's a worthy skill to acquire. You can learn more about the masterclass by clicking the links in the description. And if you'd like to get 80% off, you can contact the ambassadors through this link in the description. The description links have the tax software I use, and you can always directly message me on Twitter. And there's a lot of different spot exchanges and different resources I suggest you have a look at. They're really, really good. And if you've got your application in for the partial scholarship, I have some really great news for you. There's been 2 contributions from beloved community members. I will be announcing the Kerry Chambers partial scholarship and the Purpuratum partial scholarship, as well as some of my own. And that will make a lot of people who need access to the masterclass accessible. If you put in an application, please know that every day I'm actually assessing your application, so that could give you a hint. And remember, only knowledge can yield the result. As we look at the different crypto sectors, I want you to pay very specific attention to what cryptos are moving and what Bitcoin is doing. You can see Bitcoin going down now, but 0.76% is really a rounding error for Bitcoin. But we know it's stuck in a basic horizontal pattern. But when you look through the sectors, and I'm going to go through those in a sec, just keep your eye on what's going up and what's going down. It's very, very valuable to do this. Please consider sharing and liking this video and also subscribing to the channel. We would love to have you as a part of our globally extended KS family. If you have friends or family who could benefit from positive excellence and what we do, please introduce them to our community by sharing a video. We'd love to see them here. We have one of the best communities on YouTube. Thank you to our moderators for keeping our community safe from scammers. And please note, I don't have WhatsApp or Telegram, and there's no easy money, and I don't offer one-to-one coaching either. Thank you very much to the CTKS ambassadors for assisting masterclass students. And of course, a very big thank you to you for watching and for being part of our global family. Please remember, crypto is volatile. Always prepare yourself for the best and worst case scenarios. Reality will likely be between them. As part of your active learning, what do you see moving with Bitcoin and what do you see moving against it? We actually want to identify, when we're in a potential downtrend, we want to identify what alts are good for BORSOGing. We're not going to go into something that's decreasing with Bitcoin. We want to pick the kind of 1% that are very, very strong when Bitcoin is coming down. But we also want to pick the ones that move strongly with Bitcoin to prepare us if we get a spike up as well. Please let me know in the comments, what do you see? Stay safe out there, my friends. Take care and see you next time. Bye for now.